Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Dennis Dick, and we have Tim Anderson on the line. He's the managing director at TJM Investments. Tim, how you doing on this Friday morning?
Good morning.
Thanks for coming on. First of all, let's just talk about the old adage, sell Rosh Hashanah and buy Yom Kippur. The statistics don't bear out all that great on it. There are some years, obviously, where it works better than others. Is that something people talk about at all on the floor?
I think when the market's trending sideways and there's not a lot of other major influencing factors going on, that does come into play a little bit. It's something that occasionally you hear it talked about a lot. Some of it might be seasonal, coming right after the end of the summer also. But right now you've just got so many big issues out there, from oil to the Fed to the recent technical breakdown in the market to death crosses in the major indices, to some valuation issues, geopolitical stuff. Haven't heard much about it yet. Might hear a little bit, and clearly next week the focus will be on the Fed, because there's, not certainly no consensus at all on what they're going to do.
What about this call from Goldman here this morning, Tim? They're calling for $20 oil. What are your thoughts on this one here? Because that is a bold call.
It is, and I didn't get all the specifics of it. I think what they're saying is out a few years. Look, you've had Citigroup calling for oil going below 40. I don't know if some people will maybe say Goldman's the great contraindicator on oil. They were the ones that were calling for the super spike up to 200 in the summer of 2007, when oil got to 135 or 140, and that pretty much marked the top. So, look, it's an outlier. It's going to grab a lot of attention. Oil did have a bid to it yesterday. I think that oil probably holds the $40 level on WTI through the end of the year, and then we'll just have to see how next year plays out. There's so many events that could come into play to throw a forecast like that way out of whack.
Would you be a buyer of oil stocks here then, if you think it's going to hold the 40? Do you think there's some value there? Like, I look at a stock like Chevron with a 5.5% dividend yield. I look at a stock like ConocoPhillips with a 6% dividend. They actually
have to. Yeah. I mean, you just have to pick a couple of those and add them if you've got any type of a portfolio. And the other thing that you might look at, we're less than 3 weeks from the end of the quarter. We could be looking at the greatest portfolio flush out in beat up garbage oil names that you've seen like in a long time. I mean, even a stock like Whiting, WLL, that people think is fundamentally a good company, can't get out of its way at $16.5. And as much as a lot of these tertiary names are going to have issues going forward, I'm not recommending the name, but I just know that it's a name that a lot of people think is one of the stronger ones in their space, and you could be looking at a great flush out the portfolio trade and a lot of these beaten up oil names going into the end of the quarter.
So what you're saying, Tim, is that you're thinking like people are just like, all right, I got to get this out of my portfolio. This is it. I've had enough. Everyone is going to.
I can't take it any longer. I don't want to fill any oil or any energy unless I'm a dedicated oil and energy investor.
Tim, just scenario analysis here for you too. Let's just say the Goldman scenario does play out and oil actually does go to $20. Which companies can survive that? Like, there's going to be a lot of companies that are going to fail if we go to $20 oil. Like, are the big ones still safe? Like Chevron, Conoco, are those guys all safe at $20 oil?
The big ones have got to be safe. They've been through it before. I mean, they can borrow money. They can cut back. They can shut down some facilities, and they've got to be safe. The big ones I wouldn't worry about at all.
What about
It's
the
the
little
other
ones?
names that are it's the marginal drilling companies and maybe some of the deep water guys. And I'm certainly not an analyst in the sector, but there are definitely, if you're talking oil going below $30, then you're talking a whole different ball game than what we've been looking at for the last 2 quarters.
Can you think of a scenario where this has happened before, maybe in a different sector where good companies?
Well, the Asian contagion crisis in '98,
Yeah.
oil went to $14.
Mm-hmm. Okay. All right.
That was that's when you had all these articles and all these stories about how a gallon of oil was so much more cheaper than a gallon of water.
I remember that actually. That was when I first getting into the markets, 1998, Asian currency crisis.
All right, Tim.
That was the triple whammy from the Asian currency crisis to the Russian debt default and the long-term capital bailout.
Yep, they had a.
So you think 3 to 5 years from now, oil's probably a lot higher than it is now?
3 to 5 years from now is a long time.
It's an eternity for a trader.
We're not going back to $100.
Okay, all right.
Could we go back to the 50% higher? Would be a lot higher,
right.
But that would be $65, $70. We could get there in 18 months to 2 years. We could get there the middle of next year if you had if all of a sudden, China's economy was thought to be doing much better.
All right, so now that we've had this period of volatility since the flash crash here, big intraday ranges, big overnight ranges here. I guess you could call it a consolidation here, but come on. Do you see this? We're coming into September and October. Do you see this volatility persisting for quite a bit amount of time until the Fed gets off the schneid?
It feels like it. You've got if you look at the daily charts here, you've got like a massive like a triangle or a flag forming after that sharp spike down in a month ago. You've got a death cross on the S&P 500 and the Russell 2000. And the Dow, you've got one pending in NASDAQ, although we're not there yet. But we are holding the October 14 lows. And that's a level that a lot of people are going to look at.
Folks, we are coming up here on a moment of silence at the New York Stock Exchange and to observe the memory of the 9/11 victims here. So when that bell goes off, we are going to go silent for a minute too. So don't think you lost the reception here. I see 8:45 here, Tim. So continue talking.
Yeah, I think we got about 30 seconds.
Okay. All right.
Quickly, the death cross here, because everybody was talking about that. What are your thoughts here? Like, I'm not a huge, I'm not that worried that we had the death cross happen here, because I'm not even a big fan of moving averages on my charts, to be honest with you. But what are your quick thoughts here on the death cross?
Well, I think it's one thing that you have to look at. I don't know that you want to do like a total faith walk on it and sell everything when it happens, but it's just something that you have to take into consideration. All right, I think we're good here, guys.
Okay, all right, we're on the line with Tim Anderson. Just did a moment of silence in memory of the people that were lost in 9/11. Tim, we got a few minutes left here in the segment, and you mentioned an interesting scenario about the end of the quarter coming up and how people like to jockey around in their portfolios. Do you think there'll be any like selling of the winners here, maybe to lock in some profits here? Or do you think?
Well, you've certainly seen maybe a little bit of that with Netflix a week and a half ago. Even I believe on a very, very large up day. It seemed like people were taking some profits in it. And, people maybe don't have big profits in Apple that have gotten into it the last few months. But if you got into it 2 to 3 years ago, it's still way, way up. It didn't really react that great to the announcements the other day. Some of the biotech stocks that have had valuation issues are off their highs. And anything with valuation issues, the question you're asking really leads into to what degree are valuation issues gonna come into play here, and I think it's that's something that's got to be considered along with the technicals. You know, the S&P trades at about 17.5 times trailing 12 months earnings. You know, that's down from 19 earlier in the summer. It's not ridiculously exuberant, but it's, you know, probably higher than average. And you have, you know, you're going to see some profit taking. There's no doubt in names that have had big runs, because, you know, the investors are going to say, I've got a triple in this, or I've got a double in this, and I'm not going to I'm going to peel back some. I'm going to peel out of a quarter of it, even if I get back into it later in the year and next year.
Do you think there's a fundamental change here now? Because we've been in this 6-year bull market where if you've bought the dip, you're always rewarded here. And now all of a sudden in the last few months or last 6 months or so, you're not being rewarded here. Do you think we finally have shaken these buy the dippers? Or are they going to rematerialize here and we're just going to march back to new highs?
I think that you know, I think the time may have passed here a little bit. You know, you're certainly going to have some sharp rallies. I mean, we had a very, very sharp rally from 1875 up to,
1990s.
What's now resistance? 1990, 2000 on the S&P. But I think it's a major lift to see the market go take a real run at new highs between now and the end of the year. I just think there's too many things going against it.
Tim, well, we've been discussing, you know, with some of our guests that have been on about, you know, that low that we had, and it, you know, some say it's like a foregone conclusion that we're going to go down there and retest it. Now, you know, we're certainly closer to that than we're all-time highs. I'm just afraid that if we go down there and retest it, that's going to be a test that fails.
It might be. It might be. I mean, you know, look, we had a 7-year bull market, you know, and look, I realize that there's some strategists that I really respect in the street that are still very bullish, that have targets of the S&P that would represent new highs on the year. Maybe they're going to adjust those numbers, maybe they're not. And there's some strategists and technical people that I really respect that think, you know, the bull market might be over.
We've been on the line with Tim
so
Anderson.
That's what makes a market.
We've been on the line with Tim Anderson, Managing Director at TJM Investments. He joins us just about once a month to give us his look from the floor. Tim, great talking to you today. Have a good weekend.
Guys, have a great weekend.
Thank you.